This is Alan Bush with ADMIS. In the stock index futures this morning, we are seeing sharply lower prices. Looks like there are a variety of reasons for this pressure. For one thing, it does look like there's a growing chance that the Fed will scale back their quantitative easing program at their September meeting. Also, we do have the negative influence of the ongoing and escalating tensions in the Mideast, especially in Egypt. Also, we had some weaker than expected corporate outlook, so all of that contributing to lower prices for stock index futures. This does look like it may be a sell the rumor, buy the fact situation in regard to the possibility of a Fed tapering at the upcoming meeting. Once we do get to tapering, that could be the low for the move. Don't forget, we still have an extremely accommodative Fed, even if they do cut back on their asset purchases. Don't forget, the Fed funds target remains at 0 to 25 basis points, which is an extremely bullish situation. Over in the currencies, looks like the flight to quality influence is helping the dollar index to advance. Although it was lower in the overnight trade, it did trade higher in the morning hours. Also, we did see the jobless claims report coming in much smaller than expected, almost at a 6-year low, so that's supportive to the dollar index. Some gains in the British pound after retail sales in the UK coming in much better than expected, and selling in the Australian dollar as the outlook for commodities remains relatively weak. Also, we have interest rate differentials, which I think is probably the dominant influence on the Australian dollar, continuing to be a bearish situation. So from here, look for additional pressure in the Australian dollar, probably new lows for the move. We'll probably see some further gains in the dollar index. And in the credit markets, a big move in the overnight trade. We did see yields on the 30-year bond moving to a 2-year high. And of course, the corresponding futures falling to a 2-year low, trading at its lowest level since August of 2011. So new lows for the move at the long end. Nothing changing as far as our outlook there. We continue to remain bearish on treasuries, especially at the long end. And I think this situation will probably continue well into this year and probably into next year also. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.